Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Chainlink and its valuation against Bitcoin. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So the main purpose of this video is to just give an update where Link is in its valuation against Bitcoin. Now, many of you probably value Link in terms of USD, which is fine, but a lot of times it's better to investigate the valuation trends of a coin with respect to Bitcoin. And the reason for this is, when you're getting into cryptocurrency, Bitcoin is more or less your market risk, right? And if you imagine, say, an index fund of cryptocurrencies weighted by market cap, then Bitcoin would make up most of that portfolio. So when investing in altcoins, it is my opinion and many others, right, that you should at least investigate how it's doing against Bitcoin and see if there's any trends there, because it can actually tell you information that you would have never otherwise seen before had you not looked at these trends. So what we're going to do in this video is we're going to look at the valuation of Link against Bitcoin and talk about some of these macro level trends that Link has displayed against Bitcoin during the bear market, right? Even during the bear market and the accumulation phase. So the first chart we have here is the Link Bitcoin valuation in sats. So you can see I've multiplied it to get it back to, in terms of talking about sats rather than the decimal, by taking just the price of Link and dividing by Bitcoin. And then on the x-axis, it's days since inception. So we see a pretty nice trend, right? And back over here, we said this is a coin that, it's something that I want to be a part of, right? It's a coin that I want in my portfolio. It tends to do very well against Bitcoin in bear markets and in bull markets. Or actually, we don't know in bull markets, to be completely honest. We saw it do somewhat okay at the very end of the last bull market, but we have no idea how Link could perform during a full-scale multi-year bull market. We know how it can perform during a bear market and during an accumulation phase against Bitcoin, and it's been quite nice. It's increased 1 to 2 orders of magnitude depending on exactly when you got in. So to continue this trend would be quite impressive. If it could continue this trend during the duration of the market cycle. So the first thing we note is we have these bubbles that form, right? So you can see these little micro bubbles, short-term speculative bubbles that form, but they tend to kind of retrace back to a certain level, let's call it a level for now, that continuously increases as we march forward through time. So by identifying this quote-unquote non-bubble data, which I've highlighted in red, it may make fitting getting a best fit to this curve more useful than trying to identify trends in data that includes bubbles. How can you rationally talk about price action or data when you're comparing it to irrational periods? So let's get rid of the irrational periods where it's going through these boom and bust cycles, right? Where it starts to move up a little bit and then the Link Marines just go all in to some degree. And then you ride it up and then people get trapped up here and then it comes back down. It regresses back to the mean, if you want to call it that. So the first thing we can say is, well, we can fit this curve, right? We can fit this quote-unquote non-bubble data. Now, the fit is something that will not be sustained forever. It's an exponential fit, right? And we know that it's not going to increase. Link will not increase against Bitcoin exponentially forever. I think this would be pretty obvious if we do imagine a world where Link does stay on this exponential fit. Let's say it stays on the exponential fit for 3 more years and reaches several $100s per Link or something, with maybe $100,000 Bitcoin. Then you have to consider that at some point the market will retrace, and I doubt that the trend will hold up then. It might fail sooner than that. So you just need to understand that there are some caveats to this. It's good up until now, and so far it tends to be doing a fairly decent job. Okay, so this is our fit. If we apply a little bit of a tolerance band there, this is what we get. Now, the issue with this, though, is it's hard to see what's going on in these time frames over here, right? These are important times, but it's really hard to see what's going on because the valuation of Link against Bitcoin has been increasing so quickly over a relatively short period of time. So if we change it so that the y-axis is on a logarithmic scale, we can actually see the trend much more clearly. You can see that this band right here is typically our reaccumulation phase. And when we come out of this band, we're typically in a short-term bubble. You can see that when we exit the band, we typically come back down into the band a few weeks or a few months later. But the trend still continues to be up. If you look here, we exited the band at this point, but ultimately speaking, we came back down to it, slightly below it, a few months later. We exited the band here, but ultimately we came back into the band a few weeks later, lower than where we exited it, okay? Here we exited the band, we immediately came back lower, and then if you look much later on, we also came back down to the prior level where we exited it out. Here's another example where we exit the band, and then a few weeks later we come back into it, exit the band, a few weeks later come back into it, and then here's another time where we exited the band, and then we came back down into it. We had a single data point in it, and then we quickly bounced back out. Now, if you follow the premium channel, you know that when we entered this band at this data point, this was when I said, okay, we are in theoretical reaccumulation territory. So, this was when Link the price was between $7 to $8. But this is what actually had happened to correspond to on the Link Bitcoin valuation. We entered it for a day, and then we quickly bounced back out of it. We've seen bounces like this before, right? We've seen bounces where we come back down to it, we bounce back up, and ultimately it doesn't take that much longer before we re-enter the band. We could re-enter the band just if we were to go sideways for a few months, okay? So this is another possibility. Don't discount this possibility. I tend to think, though, that, crypto is, it's obviously more volatile. I think it's more likely that it's either going to go up or down, right? That the chances that the Link Bitcoin valuation moves sideways for months at a time is actually, quite low because you're talking about two very volatile assets. Now, if you look at this from a different perspective as well, one of the common questions is wanting to look at trends on log scales. So we can do that as well. You can see this is the Link Bitcoin valuation versus days since inception, but the primary y-axis is on a log scale, and the secondary, or the x-axis, is on a log scale too. So this would be 1 day since inception, 10 days, 100 days, 1,000 days. You can see we're quickly running up this curve, and as we run up it, we have these boom cycles where we pop above it and then come back down. We pop above it and come back down. And this cycle just continues to repeat over and over and over. So if you're more of a long-term investor, right, where you just buy an asset and you hold it for 3 years, 5 years, then you don't really care about this, right? You're looking at the long-term trend. If you're buying over here, you don't necessarily care about all these boom and bust cycles. You're just looking to cash out 2 or 3 years from now, maybe when Bitcoin, I personally think Bitcoin will not reach approximately 6 figures for another 3 years or so. So you might be thinking, you know what, I'm just going to hold Link until maybe a week or so after Bitcoin gets to whatever I think is the next paradigm shift, and then I'll sell my Link. And that's perfectly fine, right? You're more than welcome to do that. The alternative, right, is what I talk about, right? It's trading based on the risk level, and I'm not going to show it on TradingView in this video, but in prior videos we've shown many times that we have these risk levels, and we can dynamically DCA out of the market at key times and then get back in when the risk drops back down. For instance, in the last bubble, it corresponded to selling portions of Link on the way up. Now, the first sell, if you follow the moderate risk approach that I do, was 1/15 of your portfolio. It was at $6. Okay, well, you might be thinking, whoa, this seems crazy. He sold some at $6. Well, you have to also consider that I sold 1/15 of my position in Link to Ethereum when Ethereum was $235, and then I rode that position of Ethereum up to over $400 and then took profits there. So it's always a game of rebalancing the portfolio. Second of all, it was only 1/15 of my portfolio. I sold 2/15 at $10, 3/15 at $14, and then 4/15 at $18.50. And this was all published on the premium list, which you can find a link to at intothecryptoverse.com. So please check that out. So it corresponded to selling a total of 2/3 or 10/15 of my position by the time Link hit 1850. And then when the risk came back down to this data point here, I was able to start reaccumulating. Okay, so I was able to take these profits that I had on the way up and start reaccumulating that Link when it dropped back down. Now, obviously, it'd be nice to have more days of accumulation rather than just one, but at the time, this is all that Link gave us, right? We don't really control where it goes, but I react to it. Whatever does happen, I react to it. There was a single day it came down into the reaccumulation band, therefore I picked up some more Link. And the nice thing by doing this dynamic DCA approach is it saves most of your sells for later on, but also recognizing that we don't know where the local top is. So despite the fact that I sold out of the 10/15ths that I sold, or I have, let's say if you break my position up into 15ths, I sold 10/15ths of it, or 2/3. But let's just take those 10/10ths and say, okay, out of this portion, 9/10ths of it was sold above $10, and only 1/10 of it was sold below $10, and that 1/10 was sold to Ethereum when Ethereum was $235. Okay, so you begin to understand why rebalancing your portfolio in the cryptocurrency asset class can be quite important, right? The idea is when one coin goes through a boom cycle where it's going parabolic, you dynamically DCA your profits on the way up, or you dynamically DCA your sells on the way up. You put them into lower risk coins, right? So the first sell was to Ethereum, the other 3 sells were to Bitcoin, and then when it drops back down, you DCA back into that. Now, of course, there's an opportunity, or there's always an opportunity cost. If Link can continue going up, it's possible it could have gone to to $50 or $100. But my contention, right, is that at some point I would rather offload the risk and be happy with the gains than on the very small chance that it continues to climb like an order of magnitude higher. And you also have to remember that I did retain a portion of my Link position. I still held 1/3 of it even through the cycle, right? So I sold 2/3 of it from the move up to $20, but 1/3 of it I still held. And the idea is I would actually never sell quite all of it this early in the market cycle, just because the Link has never experienced a full bull market. Because it's never experienced a full bull market, we don't really know what it's capable of. But at the same time, I want to use the fact that I'm getting in at key points where the risk is low. When I see the risk pop up like this, it's my opinion that it's a good thing to take profits and then to reinvest it when it comes back down. Now, a lot of you might be hesitant about this approach, but I can assure you that it was all published on the premium list as it unfolded day over day. So this chart shows the valuation of Link against Bitcoin versus time, and the risk is color-coded from 0 to 1, where 0 means it's historically low risk and red is historically high risk. So one of the ways that we knew that Link was near the top, right, was its valuation against Bitcoin at the time in terms of its risk, not its valuation, but the trends in valuation and the trends in the volatility over time actually reached a point commensurate with where it had topped out in the past. So this was a key indicator that helped us say, you know what, I don't want to sell 4/15ths of my position in one go, but I also recognize that historically this is where the top is, and it's important to take profits. So this is the main approach. It's more of a, instead of a buy and hold approach, it's more of a, I'd rather just create a secondary source of income, invest in coins when the risk is low. When those coins risks go, when the coins that I invest in, when the risk levels go up, I just either move into other coins or move into USD depending on the phase of the market cycle. But now I think that we're relatively early in the market cycle. Therefore, these sells were either going to Ethereum or Bitcoin rather than ultimately transferring out into USD. So then if we just plot the risk on the secondary y-axis, which is yellow, we can identify a theoretical reaccumulation range. And we've talked about this many times on the channel, and I basically talk about it several times a week on the premium list. So it goes from, you can see there's a general reaccumulation range between a Link Bitcoin risk of 0.5 to around 0.65. This just tends to be where it finds support, at least in the last couple years. Doesn't mean it's always going to find support there. You can see back in July of 2018, we temporarily fell below it, but this is fine. I mean, this is fine in the same way that you dynamically DCA sells at the top I dynamically DCA buys at the bottom. So for instance, if I'm investing in Link weekly and the risk level is low enough and then it drops down here, then I might increase my DCA into Link from Bitcoin by say 2x for that week or 3x depending on how low the Link Bitcoin risk goes. And actually, I actually mainly trade it based on the Link USD risk, but I look to say the Link Bitcoin and the Link Ethereum risk to identify what coin would it make sense to sell this Link to in the short term to minimize my risk exposure to the market. So I hope this has been useful. I know it's a lot to take in. This is, while we are theoretically in a reaccumulation territory against Link Bitcoin, so, maybe if you don't own any Link, identifying that, okay, we've entered the reaccumulation territory. I personally am more risk averse, so I also, there's also some other boxes that it needs to check, for me to continue to reaccumulate. And of course, you can always check out the premium list at intothecryptoverse.com. You can find it here. You get access to a weekly premium report, a weekly premium video, a Telegram alerts channel, a Telegram chat room, and then the risk dashboard, which is what I use to trade. So check it out. You can pay with crypto to get a discount for a lifetime membership. And then also, if we go over to the chart, you can see quite clearly this trend in Link Bitcoin, right? It's continuing to march upwards. But as we always have, we've had these boom cycles where it tends to, just explode out of support, but ultimately retrace back down to the general exponential trend that it's been on its entire lifetime, right? It was a poorly drawn line, but it looks something like that, right? And it's all about taking advantages of these trends and trying to increase your Link stack by identifying, when it's up significantly in the short term, it might be worth taking profits back into Bitcoin and then reinvesting it when it gets back down here, in what I would consider to be that reaccumulation phase, that Goldilocks zone. You don't want to be that person, right, throwing in a ton of money at the top here and saying that it's just going to continue to explode. You want to be the person that's moving into the market when it's quiet, when people up here are selling you their bags, right? When people that bought up here are selling you their bags down here. It's all about the smart money and the dumb money, and trying to if you are the dumb money, trying to switch sides and become the smart money. So the main thing that I think that will help Link continue this very bullish trend is for the cryptocurrency asset class to just remain healthy. If Bitcoin reaches $20,000 in say 16 months or so, a sustainable $20,000, and this Link Bitcoin valuation continues, then the valuation of Link and USD can increase several times from here. It's just a matter of the same trend that it's always been on, just simply continuing for another year and a half. So if you're not familiar with the channel, the reason why I talk about Bitcoin, I mean, if many of you think that Bitcoin is going to 100K next year, and you buy into, say, the 4-year cycle theory, I'm here to tell you, right, that there's the evidence to support 4-year cycles is basically non-existent. And it's essentially developed from cherry picking one market cycle, and thinking that because that was 4 years, that they all have to be 4 years. But I'm here to tell you, right, that it's more likely that we're experiencing lengthening cycles. The data suggests it. If you just think about it, it's going to take a lot more money coming in, a lot more volume to move it from, say, 10K to 100K than it would from a 1K to 10K. That's why if you look at small market caps, projects with very small market caps, it's much easier for them to go from, say, like a market cap of 1 million to 100 million than it is to go from, say, 100 million to 10 billion or something, right? It's a lot harder the higher up you go. So the lower the valuation, the easier it is for those projects to explode. And because of that, I think the data suggests it, which is the most important thing. Technically speaking, this is what the data says, and being technically right is the best way to be right. Technically correct is the best way to be correct. And from a technical standpoint, the data suggests that Bitcoin will not reach a sustainable 20K for another 16 months at least. I'm pretty much targeting the end of 2021 or early 2022. Obviously, there's some uncertainty on that. The uncertainty primarily, though, I don't think would be this way. I think it would be this way, to the right. So I would say, it's going to be a long ride. Just buckle up. if this trend continues, then we might see. I mean, Bitcoin. It's always possible that it comes to 20K sooner, but I don't think it would be sustainable, right? I think we would come back down, and that to get to a sustainable 20K, it's going to take another 16 months or so at the very least. So this is my general opinion on the markets. This one was focused on Link with respect to Bitcoin. We talked about the exponential growth of Link that it has had against Bitcoin. We looked at the risk levels. We looked at the valuation of Bitcoin and the trend for Bitcoin to try to identify, what Link may do over the next several years. So the contention is that if Bitcoin goes to a sustainable 20K over the next, say, 16 months or so, and the Link Bitcoin valuation continues at the same rate that it's been going, then we're likely going to see a several X multiple from here, probably somewhere between $50 to $100 per Link, if this trend continues to play out, right? There's no guarantee that it plays out, but if it just continues the same trend, then this is what we might expect. And then once Bitcoin goes above 20K, I imagine that a lot of money will pour back into Bitcoin for a little while, or on the way to 20K, I should say. So on that last surge to 20K, money will pour back into Bitcoin. Once Bitcoin gets to 20K and then sustains it, then I think other altcoins like Chainlink could see further, further times of explosive growth as they try to figure out what their fair value is. Now, remember, some of you might think like it's impossible for coins to see these types of ROIs. $1,000 investment into Ethereum in November of 2015 would have been worth approximately 1.5 million in January of 2018. I do contend that the market cycles, the ROI is going to decrease. So I think that for the most part, the average ROI from each coin's market cycle bottom to their market cycle top this time will be less than, say, a random bag of coins from the last market cycle. I think that the market is becoming more efficient. But with that said, there's still a lot to potentially gain if these trends just continue. I mean, this is not financial advice. This is just looking at the markets from a data science perspective and projecting it forward for a number of months, a number of years. So at the very least, if you guys like the content, please subscribe to the channel. Give the video a thumbs up. Remember to check out the Telegram channel, which you can find a link to in the description below. And then also check out the premium list if you want access to this information more frequently, more regularly, where you can access the risk levels. Then check out intothecryptoverse.com. That'll wrap it up. I'll see you guys next time. Bye.